Last week, we discussed areas of the market that continue to do well despite the impact of coronavirus. This has sparked a number of questions from both clients and advisors, and I'd like to take this opportunity to answer three specific questions. Which market do we see value in? Have we seen the real fall, or was March just a preview? Which markets are poised for a recovery? To answer this question, I would like to cast your minds back to, dare I say, the EU referendum. Over 3.5 years have passed since the vote, and there is no doubt that Brexit uncertainty has hamstrung the British economy. To illustrate this point, since the EU referendum till the end of 2019, the UK market has returned 22.9%, compared to the US market up 58.6% over the same period. Pre-pandemic, we were far more optimistic for the outlook of the UK, given that we felt it was relatively undervalued going into the crisis. And with more certainty around Brexit, as Boris would put it, there was a chance to unleash Britain's potential. The pandemic hasn't changed our opinion on the UK market, and we actually feel this argument has been strengthened further. Unfortunately, this is still a bit of a crystal ball question, but there's no doubt that much of the panic selling seen throughout February and March was irrational. Markets have steadied over the past few weeks as investors have had time to take breath and reassess the long-term impact the virus is likely to have. For the time being, markets have looked past the negative news, rather focusing on the announcements of imposed lockdowns and when these might be lifted. This indicates that many feel the recovery will begin as soon as some sort of normality resumes. In recent weeks, there has been positive signs that the contagion is slowing, and in many areas now under control. Indications of relaxing certain lockdown measures have certainly allowed markets to rally, and we expect more positive lockdown news to provide further support to markets. One thing that is for sure is that volatility will remain at elevated levels over the short to medium term, as there are still many unknown obstacles to overcome. It is clear that absolutely no market has been immune to the economic shock caused by the virus. In terms of a region's ability to recover, we would place more importance on government responses rather than the economic strength of any particular region pre-crisis. For example, the UK's measure to introduce a furlough scheme allows British businesses to retain their employees, and therefore a larger proportion of the UK's workforce will have jobs to return to. This will give the UK economy more of a kickstart than economies that have experienced a high level of redundancies. We feel the UK market is still relatively undervalued when compared to other developed markets. The UK government's delivery of support is likely to be more impactful than measures we have seen elsewhere, and positive news in relation to imposed lockdowns will provide further support to investment markets. I hope you've enjoyed watching. Remember to stay safe, and if you have any questions regarding your own investments, please do get in touch.